Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about LUYE Pharma interim report. LUYE Pharma Group Limited offers a diverse range of businesses and services across various markets worldwide. The company provides pharmaceutical products for treating conditions such as ovarian cancer, hypercholesterolemia, cerebral edema swelling, venous reflux disorders, type 2 diabetes, schizophrenia, and toxicity caused by ionizing radiation. The list of its notable products includes Liposucciamine Boyonu Zujikang Maitana Bakesi Seroquel Erzafri, Rivastigmine Multiday Transdermal Patch, Rekindo Ludingyu Aukai Maybury Jinyuping. In addition to product development and sales, the company also engages in distribution of pharmaceutical drugs, research and development of antibody drugs, manufacture and sale of biopharmaceutical products. The lack of significant change in LUYE Pharma's stock price over the past year can be attributed to several factors. Mixed financial results, where revenue increased but net profit declined, likely led to a neutral market reaction. Anticipated product approvals and launches, such as Ruxinlin's marketing approval in Macau and the launch of ERZOFRI in the US, were largely factored into the stock's valuation. The company's pipeline development progress, including ongoing clinical trials for new drugs, provided consistent support for the stock. Additionally, stable volatility and routine financing activities, such as the issuance of convertible bonds, contributed to the stability of LUYE Pharma's stock price. Overall, a balance of these factors prevented any single event from causing a substantial decline in the stock price. The primary drivers of revenue growth or decline are multifaceted. On one hand, revenue growth can be attributed to several key factors. The company's expansion into new markets such as China, US, and EU has contributed significantly to its revenue growth. Additionally, the establishment of over 50 sales partnerships worldwide has also played a crucial role in increasing revenue. Furthermore, the growing R&D capabilities and pipeline product candidates have led to an increase in sales of oncology products by 13.5% and CNS products by 5.4%. The company's efforts to secure patent grants and pending applications have also contributed to its revenue growth. On the other hand, revenue decline can be attributed to a decrease in sales of cardiovascular system products and alimentary tract and metabolism products. Furthermore, sales to specific customers such as Steward Cross and Qingdao Lui have decreased by 20% and 7%, respectively. These factors highlight the importance of diversifying customer base and product offerings to mitigate revenue decline. Net income and profit margins. A mixed picture. The financial performance of a company has shown mixed results in terms of net income and profit margins. On one hand, the net income decreased by Rm 80.8 million or 18.4% as reported on page 6. However, on page 19, it increased by approximately Rm 79 million or 3.8%. This fluctuation suggests that the company's financial performance is not consistent. The profit margins also present a mixed picture. The gross profit margin remains stable at 67.8% on both pages, indicating no significant change in the company's ability to maintain its pricing power and control costs. However, the net profit margin decreased due to the decrease in net income, as reported on page 6. Unfortunately, there is no information provided on page 19 regarding any changes in the net profit margin. Overall, the mixed results suggest that the company's financial performance is subject to various factors and may require further analysis to understand the underlying reasons for these fluctuations. The company's financial performance indicates a strong ability to generate cash from its operations. Two key indicators support this conclusion. Firstly, on page 36, it is noted that Rm 92,899 was generated from operations, demonstrating a significant inflow of cash. Secondly, the net cash flows from operating activities on page 37 amount to 1,784,352, further confirming the company's positive operating cash flow. The company's financial health has undergone notable changes over the past year. A significant increase in debt levels was observed, with total debt rising by 18% from Rm 8,294.4 million to Rm 9,770.9 million. This trend is further supported by a 10.9% increase in total current liabilities and a 16.8% rise in interest-bearing loans and borrowings. Furthermore, the company's interest expenses have also seen a substantial increase of 22%, from Rm 177,000 3,836 to RMB 338,460. Additionally, the interest rate on convertible bonds has risen from 5.85% to 6.25%. These changes indicate that the company is shouldering higher financial burdens, which may impact its future performance and profitability. The financial performance of various regions and segments has been mixed in recent times. Regions such as Latin America and Europe have underperformed, with the former experiencing the lowest revenue among all regions and the latter having the lowest gross profit margin. In China, certain therapeutic areas have struggled, including metabolism and cardiovascular, which saw revenue decreases of 7.9% and 9.2%, respectively. However, other segments in China have performed well, with oncology experiencing a 13.5% revenue increase and CNS seeing a 5.4% rise. North America has been the top-performing region, boasting the highest revenue among all regions. Central nervous system drugs, despite having a low segment result margin, still reported a positive segment result. Overall, while some segments have struggled, others have shown significant growth, highlighting areas for improvement and potential opportunities for expansion. The company's management is optimistic about its future prospects. They believe their sales and marketing model gives them a competitive edge, allowing them to expand globally with an international supply chain that meets high standards. To meet increasing demand, the company is investing in new production capacity through Project Miesbach 2027. This strategic approach positions the company for long-term growth and success. There have been no significant transactions involving the acquisition of new businesses or assets by the company. Similarly, there have been no major disposals of existing business units or assets through divestiture. The company's financial structure remains unchanged in this regard. The company's financial summary reveals that it has a history of paying dividends to its non-controlling shareholders. However, there is no record of any share buybacks being made by the company. This suggests that the company prioritizes distributing profits to its investors through dividend payments rather than repurchasing shares on the market. That concludes the financial summary for LUYE Pharma. Feel free to comment below, and I will be happy to answer them when possible.